We are back at it again and welcome to the second episode of 2021 for the Millionaire Investor Series. And in today's episode, it's going to be for all the millennials in Singapore out there, is how do you properly kickstart your real estate portfolio as a millennial in Singapore. As most of you would have known or have seen from all the news articles that were written, you know that I bought a property at the age of 22. And unlike others, I did not buy a BTO. I actually bought a private property as my first property, right? And most of you would know it was a 2-bedroom, 2-bathroom apartment in Twinview, and I got it at around 1,389 per square foot, and it was close to $1 million plus if I'm not wrong. And now it's already the 3rd year mark where I could really realize my profits, right? So in today's episode, I'm going to share with y'all, right, as a millennial in Singapore, how then should you kickstart your real estate portfolio? If you are a millennial who is looking to invest in a real estate and you think that you can flip properties for millions of dollars nowadays, the answer is that you cannot, unless you have huge financial capital outlay for you to play with, right? A very conservative $100,000 to $200,000 to $300,000 is actually still really good nowadays, okay? So in my line of work, I've met plenty of millennials who kickstart their property as a BTO first, property portfolio with a BTO first, millennials who have kickstart their property portfolio with a resale HDB first, some with a resale condos, and others who actually start off with an investment asset at first, right? So most of the millennials who have bought some properties through me, you know that I've always pitched that your first property that you should consider will be a property that can kickstart your real estate portfolio, okay? And the reason behind that is because I've met plenty of individuals in the market, and some of them actually regretted not buying the first property proper, because that will greatly hamper your progress when you're building your real estate portfolio in the future, right? But who am I kidding? In Singapore, the real estate prices are really high. Singaporeans, or especially millennials, right, who are taking a day job or a full-time job about 5 to 6K nowadays, is not going to be able to afford or buy such a huge property or buy a first investment property, especially if you have some plans married, right? So today I'm going to share with you a little bit more, which I did share in my previous videos, as to why I decided to buy my first property as an investment asset. And it's already 3 years, so it means that I can sell the property soon and I already can realize some of the profits from this property. So most of you who have read the articles that were written about me or watched our YouTube videos previously, you would know that I actually bought a property at Twinview, right? It was a 2-bedroom cum 2-bathroom apartment that was a 732 square foot apartment that is 1,389 PSF. It was slightly above $1 million plus, and when I bought it, I kid you not, it was crazy, right? It was expensive. I could take a loan then because I already had some income statement from my real estate business. I had some capital outlay from my real estate business, and that's the reason why I decided to invest, okay? So today, as a millennial in Singapore right now, how then should you kickstart your real estate portfolio, okay? So if, let's say, capital outlay for you, it's a problem and your parents are not able to afford to lend you some money, or none of your friends are willing to do so, which I think it's usually the case, please remember, you can always start your real estate portfolio with a BTO first, right? Buy a BTO first, get the subsidies that you require, buy a new home, and upon MOP, if you decide to sell it off, you can sell it off for some profits as well. But as for myself, why did I decide to buy a private property then, okay? So in the entire spectrum of things, when investing in a portfolio, I always believe in this. At the age of 20 till 30, it's when you can do everything needed to accumulate capital. Actually 20 to 40, you can do whatever it takes to accumulate capital. And real estate itself is actually a vehicle for you to accumulate capital as well. So initially when I bought Twinview at 1,389 PSF, currently in the market, Twinview is already going about 1,006 plus PSF before TOP, right? This is the kind of property that, when I invest my money in, I'm able to cash out a few $100,000 because I made the right investment. And this is amazing because it allows me to accumulate my capital. So the first factor that you want to take note of as a millennial when investing in real estate is ask yourself, can that particular asset help you accumulate capital in the future? We have seen how some resale HDBs, when you sell in the future, you do not make money. Some resale private condominiums, if you don't buy it undervalued, you may not make money because prices usually stagnate after TOP, or prices may even dip. So ask yourself, is your first asset going to be an asset that helps you accumulate capital? But let's say today, if you are a very good stockbroker, you're a very good investor yourself, you're able to get crazy returns in the market, then you don't have to just solely focus on real estate. Maybe use it to diversify your portfolio of risk as well, right? So that is the first factor. At the age of 20 to 40, buy something that allows you to accumulate some capital so that you can save up some money, and then from 40 to 60 is when you do the last restructuring of your assets, where you invest in investment products that can either capital preserve or leave a legacy for your kids. Or some of my clients who have been through me, right? Some of their net worths are actually quite high. What we usually do is that we restructure their assets into some assets that pay them really good returns in terms of passive income, right? Don't just go and focus on passive income now, because when we are young, we have the energy to work. You don't have to go and build that yet. That's just my take. Go and accumulate as much capital if you can, when you're young. So the second factor is you have to be wary about the names that you use in your property, right? Do not include both names unless it's absolutely necessary. Maybe you need both incomes to purchase the property, to take a loan, or you need both CPF. If not, if you have the capability to do so, right? Please do not buy under both names. An example would be myself, right? I bought the investment property under my name so that I can free up Penny's name in the future to be able to buy a property under her name for own stay, right? Don't buy under both names. Unless you're buying a HDB, you have no choice because you require both parties to be part of it as a joint tenancy. But if not, why you do not want to buy under both names? Because in the future, if you were to buy an investment property, you have to be able to pay off that 12% additional buyer's stamp duty to the government, and it's a lot of money, right? To put things into perspective, if it's $1 million, you have to pay $120,000 worth of taxes, and that's not even including your buyer's stamp duty as well. So if you free up the other party's name, you are able to buy another property under the other party's name and then flip property as you accumulate capital as well, right? And let's say if you already bought a property together, right, then you can do something called decoupling, right? Decoupling where you can portion some shares away, free up a person's name, and then you're able to buy another property as well. Okay, so this is the second factor. Be wary of the names you use in the property. So the third bonus question that many millennials ask me is whether BTO is actually a good asset to kickstart your property portfolio, right? Actually, BTO is quite a good asset for millennials because it's affordable and it's big, and upon MOP, the minimum occupancy period of 5 years, you still can sell for some profits as well. However, looking at the current situation in the market where BTOs nowadays require 5 or 6 years before you can collect your keys, that means total you need to wait for 11 years before you are able to start investing in an asset, right? To put things into perspective, if you are 24 or 25 this year, you have to wait till you're 35 or even 36 before buying your second property. And this 11 years to me, right? Originally, it's about 3 years to build, 5 years MOP, 8 years. It's about 3 property cycles, and you will lose out a lot of opportunities if there are some good opportunities in the market that you want to enter. That was actually one of the reasons why I decided not to buy a BTO, because I knew that if I were to invest properly with the fundamentals that I had, with the investment philosophies that I had with all my clients, we are able to profit some money on a 3-year basis, because the seller stamp duty is only 3 years. You don't have to wait for the property to TOP. There's no minimum occupancy period for private properties. With all that being said, right, as a millennial buying Singapore's real estate, you need to make sure that you can afford the property. So do not over leverage, right? Always go to a real estate consultant like us at JNA Real Estate before investing in a property. And secondly, right, if comfort to you is more important, if you're already going to start a family, then just buy a property that gives you that comfort. Settle down your family first before considering when to invest in another property. But if you want to make things objective, and if you want to see it from a solely investment angle, which is how I see my things currently, right, then buy the right asset. Because if you don't do so, that will set you back a couple of years, and that will also eat up the profits that you are supposed to receive. And why are these profits so important? Because nowadays, down payment for a property is hard, right? Which means you need to find cash from somewhere. And by buying the right property with as your first asset, you are able to save out some cash to purchase this property. So if you think that this episode has been beneficial for you, do me a favor, okay? Leave us some likes, subscribe to our channel, and share with your friends, because I think this is going to benefit them. But if you want, let's say, a nice non-obligatory discussion with our team, you can always do so. We can meet up over Zoom or over face-to-face, and we can talk a bit more as to how you can properly restructure your portfolio or how you can properly kickstart your asset, right? Remember to give us a like, subscribe to our channel, and thank you so much for watching this episode of the Millionaire Investor Series.